Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Pick segment. I am Jeremy Mullen, and Nina will follow me with her pick. But first, we will be looking at Affirm. The ticker symbol for this one is AFRM. The stock has a Zacks ranked number one strong buy. This is a financial service company that offers buy now, pay later solutions, allowing customers to make purchases and payments over time. Affirm offers point-of-sale payment solutions, merchant commerce tools, and a consumer app. We looked at this one about 6 months ago when it was around $40, and the stock did take off. It went all the way to $80, but this recent market sell-off has brought Affirm back down to 6-month lows. So the sell-off looks like a great opportunity for long-term investors to get exposure to the fintech space, but this also looks like a great time for short-term investors to trade around perhaps a core position that they could hold for the longer term. So I want to look at this one now that we're back at this $40 level, but before we jump in, let's take a look at the fundamentals and the technicals and see why I'm bullish into the end of the year. Okay. Profile page for Affirm is on your screen. As you can see, it's the Zacks ranked number one strong buy. We have a F in value, B in growth, and F in momentum for our style scores. Now, the F in value, this has been a stock that has an F in value for a while because the earnings have been negative, but those are improving. So that's where the growth comes in. We want a growth in earnings to grow into the valuation. On the F in momentum, that can have a lot to do with the stock selling off and some of the earnings estimates not being as aggressive as they were in the past. So let's look at this. Some of the stats down here. We have a market cap of $13 billion and no dividend. Now, the next thing we want to do is look at the previous earnings. As you can see, we IPO'd back in 2021 and a very volatile ride here. The stock really took off. That 2022 sell-off destroyed it. We came all the way back down to 10, and the company really had to start beating on earnings before it could get going. And as you can see, in 2024, 28%. We had 38%, 69%. Little hiccup here, but the guidance is pretty good and the market took off. So we made new highs, that we hadn't seen since 2022. And then this last quarter that we had in the first quarter of 2025, 215% EPS beat. And that's when the stock went all the way above $80. Now you can see on the chart here, and we'll look closer at this, the stock has been cut in half since. And that is due not to the fundamentals, but more with the overall market weakness surrounding the tariffs. And looking closer at that quarter, we talked about the 215% EPS beat, and with that, the company beat on revenues and raised guidance. Fiscal year revenues were taken up to $3.13 to $3.19 billion versus the $3.11 billion expected. Active merchants were 337,000 versus the 323,000 last quarter, while active consumers were 21 million versus the 19.5 last quarter. Affirm's management highlighted a record-breaking holiday season with standout growth across key categories like third-party marketplaces, travel, and a 113% year-over-year jump in Affirm card GMV. Now, let's see what the analysts are saying. You can kind of see if you look at the agreement, this is the estimate revisions. We have a mixed bag. We have a couple quarters, current year going up, and then we have next quarter going down. So we want to look at this magnitude here and see how much are these earnings estimates actually moving. And as you can see, negative 18 cents 90 days ago to the current 8 cents. That's pretty good movement there for the current quarter. However, we look at next quarter when earnings are supposed to go positive, we see a little hiccup here, right? 12 cents down to 8 cents. But then looking at the current year, the momentum is clear. And this is a big revision down over the last 90 days. And we're almost positive here. And then next year we will be. So we see 53 cents to 60 cents. The momentum is going in the right direction. And with that, we have some nice price recommendations from some of these analysts. BMO Capital Markets has resumed Affirm with the outperform with a price target at 69. Goldman took theirs to 56. They reiterated their buy, and TD Cowen initiated Affirm with a buy and a price target of 50. These are all post-earnings price targets. So that's significantly above the current price target or current price of $41 where it's trading last look. So let's look at this chart. We can see this nice move from August of last year up into the February highs of 82. Okay, we did the video somewhere around here where we talked about the upcoming quarter, and clearly that was, we were really accurate in how the stock could perform based on what those analyst estimates were telling us. And we pulled back a little bit, but then shot after that recent quarter we talked about, shot up to that $82 level. But the market weakness has been evident, and we came all the way back down to this prior support, close that earned gap, and we bounce from there. So nice little bounce. That's a 25, 30% bounce. Nothing to be disappointed if you grab that $31 area. But now the question is, where do we go from here? Well, we can probably lean on this $30 level. And for the short-term traders or investors, what you want to be doing is buying into weakness and then selling into strength. So the levels above I want to talk about. This is a 21-day moving average, this green line. You can see it held here, here, and here. It's about $44. We get above this level, the 200-day likely to be tested. That's about $48.50. Then we can talk about perhaps the $55 level. Now, your fib resistance levels are going to be 57 and 63. I think a very tough time getting past this unless there's some blowout quarter. And then if we get above that $65 level, we can talk about new highs and beyond. But for now, I think you just trade this against the $30 level for your short termers and just sell into this resistance. For your longer termers, I mean, if you can lean against this prior support here and the market has put in a bottom, we're probably going to have some buy-in into earnings. And perhaps if we can get a repeat quarter like this, we can get some nice upward moves over the long term. Okay, that's it for me and Affirm, AFRM. This Zacks rank #1 strong buy is looking good on the fundamentals. The chart's a little iffy, but what chart isn't right now? If we can see some progress, get above those moving averages, I think we have a nice winner into the end of the year. Okay, that's it for me and Affirm. Here is Nina with her pick.
Thanks, Jeremy. I'm Nina Mishra, and my top pick today is CME Group, ticker symbol CME. And this is a Zacks rank #1 strong buy stock. So let me share my screen and talk a little bit more about the CME Group. So this is from CME's earnings presentation. So as we know, it is the world's leading and most diverse derivatives marketplace. And in fact, it is the largest future exchange in the world, both in terms of trading volumes as well as nominal values traded. And if you look at their product suite, so they provide derivatives for interest rates, energy, equity indexes, agriculture, foreign exchange, metals, everything. And now we know that in the current market environment, uncertainty is the only certainty because of the trade and tariff related uncertainties, which may impact global growth. And so we do not know what is going to happen next month or next year. And traders, institutional traders, as well as retail traders, they are looking for hedges. And we know that elevated markets uncertainty has led to record volumes of trading across various asset classes, including all these hedges. And CME Group is poised to benefit from that kind of record trading volumes and need for hedges. If you look at the presentation there's certain other impressive statistics, including strong history of volume and net income growth. And you can look at other details also, how they have been diversifying and expanding. Another slide that I like here is that they have been returning cash in the form of dividends and share buybacks, returning capital to investors. So that's also an interesting impressive history of dividends and share repurchases. Now let's go to the quote page on Zacks.com. So as I mentioned, it is a strong buy, Zacks rank #1 stock. And the industry rank is in the top 3%. That is also pretty impressive. if you look at the detailed estimates tab, they reported their quarterly results in February, and you will see that results were pretty impressive. And because of those impressive quarterly and annual results, analysts have been raising their estimates for the company. So you see that estimates for the current year and quarter, they have been going up, and that is the estimates revision. Earnings estimate revision is the main reason why stock has gone to a Zacks rank number buy. And talking about the stock price performance, you will see that the stock is actually up more than 14% year to date, significantly outperforming the S&P 500 index, which is down more than 8%. So it has been hitting highs and after highs this year, which is pretty impressive. And if you look at the price consensus at EPS price chart, you will see that the company has missed only once in the last 5 years. Now, they are set to report on 23rd of April, and analysts expect strong results. So because of all these reasons and elevated market uncertainty, which leads to higher need for hedges, CME is poised to benefit, and I expect them to report strong results again. And that is why the stock is worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with 2 more interesting top stock picks.